Hey, welcome back to Two Stupid Guys Trade Stocks. I'm Dylan.
And I'm Vinny.
And we're going to talk about a bold claim that I think you should not invest in the SPY or the Qs. It could be a waste of time, and that there is a more recession-proof way to do this. I understand what I just said is breaking a lot of norms. Just bear with me here. Two Stupid Guys Trade Stocks. All right. Obviously, you do whatever you want. Don't listen to me. I don't know what I'm doing. I didn't say don't invest in the SPY. I'm not going to. Should preface with that. There's a far more efficient way to make gains, and I'm going to tell you why this is truly holding you back. All right? Here's your SPY. All right? Now, these are going to be over the same time frame. You can see the peak, the beginning of 2022, and now we are at all-time highs. Qs, same thing. All-time highs. Okay? Wild. But here's a percentage of S&P 500 stocks trading above the 15-day moving average. Okay? You would expect with all-time highs, this should be at a relatively high number. We are in the 60s.
Broad-based rally. Okay, I get what you're saying. Yeah, it's very concentrated.
Over a third of stocks are under the 50-day moving average, they're not even near highs, which is wild. Okay? Here's another graph showing we're kind of in the middle of the peak. Here's the 200-day moving average. Percentage of stocks above the 200-day, meaning we have around 27%. Okay? Wow. Not quite a third, but 27% of all stocks below the 200-day moving average. That is a slow as hell moving average.
Yeah, that's well in like bear market territory right there, right?
Yes. Yeah, wild. Okay. Now we're just going to look at quick graphs. Okay. Here's Microsoft, biggest company on the planet. Wild, shooting past. Apple, actually kind of stagnant. I shouldn't even say stagnant. It's like $2 trillion, but whatever. No, it's almost 3. Just kidding.
Hey, Buffett's been selling. If you saw that, by the way.
Big deal.
Yeah.
I don't know how to explain this one.
No one.
Yeah, I don't know. It's just up a lot. It's Meta, same, just shooting past. Yeah,
up a lot.
Great. This is probably my greatest call and my greatest share of greed, because I was like, market's not understanding this at all. This is going to be crazy. And I had a limit order at like 84 and I had 86, and now I hate my life.
Yep.
$2, Dylan, you fucking idiot. Here's Google, actually more reasonable. Okay. Now, here's the S&P 500 index percentage gains over 5 years. So the index is at 82%. Okay. Now I'm going to show you, we're going to look at 3 sectors here: communication services, consumer discretionary, and let me move my face to this 192% gain of technology. Okay. Now I want you to look at the other sectors. Healthcare, respectable. When I say respectable, they're still 23%-ish under the SPY, meaning they're underperforming. Same with all of these. Real estate's at 10. Avoid that shit. And then consumer staples and energy, right? Very low. They're all well underperforming the overall market.
Over the last 5 years, yeah?
Over the last 5 years. Now, if you look at the Q... Hold on. I have an answer for that. Hold on.
Okay.
I went back further.
All right. Yeah, I like it.
All right. So consumer discretionary holdings up 64%. It's up that much because Amazon and Tesla's in this category, and that's 40% of the holdings.
Yeah.
Up 900% and 115%. Okay?
Perfect.
Dope. Communication service holdings. Okay? This has your Meta, your Google. Netflix is in here too. But just between Meta and Google, 50%. 50% of this sector is 2 stocks.
Yep. Lovely.
Okay, so if they weren't in here, that whopping 73% would be down in the 20s. Great. And technology. I don't really spend a lot of time on this one. All the companies that are having ridiculous gains all in one place.
Yep. So awesome. Nvidia's up 1,880%. Is that over 5 years?
Yeah.
Nice.
hmm
Damn.
You know, it's cool. I had them at 160 and sold at 200. Solid gain. Worth it.
It
Idiot.
was a good game.
Idiot. Now, compared to its group, the Qs, low expense ratio over the prior 10 years has outperformed the S&P 500 by 186% over 10 years. That's disgusting. Now, the Qs have not been around forever. It hasn't been like the SPY. I think we only have like 25, maybe 30 years of history.
Oh, the Qs. I do not know what year they started. I
Qs?
can tell you, S&P 500 was 1957. I can tell you
Hold on.
that, but I can't tell you
When
what year the
did
Qs started.
the Qs start?
If I
This
were
is
to
a
give you a
quick
ballpark,
lookup.
I'd probably say like 87, maybe.
99. So we have 25
Oh,
years.
wow. It's much younger than I would have thought. I thought late 80s.
Yeah, so there's not a ton of history to go off. It happened right before the dot-com bubble, right?
Yeah.
Now, this is wild. A recent study showed that only 2.39% of stocks are responsible for literally all of the gains in the past 30 years. Okay? The same study found that one of the most common outcomes among stocks on the global basis is a 95 to 100% loss in under a decade. Meaning, a ton of stocks come in the market, right? A lot of them are going to fail. MoviePass, great example. That was destined to fail. It was a terrible
Yeah.
business plan, right? You're going to have a bunch of those. So it's going to be skewed. But 2.3% or 2.4% of all the gains are from these stocks. Very low
Oh,
number.
2.4% of the
Yeah.
stocks. So,
Thank you.
yeah, gotcha. Okay.
So essentially, instead of just buying the S&P 500, which this is what I'm going to do if we get a correction, because right now I know I keep on saying it's so high, it just can't get higher, and then Nvidia gains another 300 billion in a day.
Can get higher.
It,
Can
yeah,
always get
it definitely. I agree. Now it does hurt me to put Tesla on this list. I just whatever. I, respect where it's given. I don't know if I could ever truly pull the trigger on buying shares of that one, because I think it should be worth like $30. So the other ones, I understand. Now,
Okay.
here's the point. We go into a recession, okay? Not right now. Just let's say we go into a recession, all right? A lot of things take a hit. Target, Walmart, consumer staples, ton of things will end up taking a hit. You know what won't take a hit? AI, okay? Because it's the future. It's the thing that's going to be running things that we don't even know what we're building. If you guys saw OpenAI Sora, it's disgusting. It's not going anywhere. It's only going to be more prevalent in our lives. The amount of applications of it are outrageous. You're talking to someone who doesn't know how to convert a PDF. I'm not the greatest person to ask about what you can do with it because I don't understand it at all. All right? But I do know that these companies are heavy into AI. So if there is a correction, you're going to have an easier time buying these on a dip than buying the SPYs or the Qs. The Qs, which have outpaced SPY over 187% over 10 years, if it was just these companies, would be like 1,200%. But it's also being held down by these other companies that don't do anything, don't have any gains, but because they're in the top 500 of companies, they're in the SPY, they're in the Qs, right?
Okay.
Now, are there other companies out there? Yeah, Chipotle makes a ton of money. I'm not saying that's going anywhere, right? But it's really hard to pick the Chipotle because there's a bunch of other Chipotles that don't do well. Whereas these companies are not going anywhere. These have entered into big bank status. They can't fail. Too many bad things will happen.
Interesting.
Yeah. A lot of
There's
claims.
there's so much that I want to unpack with what you've said actually so far. The okay, so you're looking at it from a kind of rearward looking perspective, right? So you know which companies are going to do well.
Yeah. Hindsight's 2020. Yes.
Yeah, exactly. Do I think these companies are going to continue to do extremely well for quite a long time? Yes. But then, we've also had that where we look back at the biggest companies in the world in like 1980 and like 30 years later, none of those companies were in the top 10 anymore.
Mm-hmm.
So we know that there would be this cycle of replacement of these magnificent seven, as they're calling right now. Um,
And I agree. Tesla. There's no way that's going to be there in 10 years. I'm shocked. So I'm not saying this is foolproof. I don't
yeah.
see Apple, Microsoft, all the companies that are going towards the most important things in our future, AI, are on that list. Now,
Well,
there are a ton of smaller companies that could go
uh-huh.
insane, right? But are they already in the S&P 500? Are they already in the Qs? I don't know.
Yeah. Well, that's what my argument would be is you're the next company that may be this magnificent seven level of massive size and profitability, maybe a small startup that is, some guys working out of their garage
True.
using some
Absolutely.
NVIDIA GPUs to create their own AI, and they just happen to be the most successful at it. Um,
But they
just
would not
because
be
some
in the S&P 500.
Exactly. That's what I'm saying. Is like,
Yeah.
a broader, more diversified portfolio is more likely to catch those 2.4% of companies that are responsible for all of the gains, right? The more companies you own,
True.
the higher likelihood it is that you own one of those that just goes parabolic. So that's when you're looking at more total stock market investing,
Well,
like
that's
VT.
so there's two sides of that coin. One, you would have to have this startup in the garage already in the S&P 500, which is not going to happen. Look at how long it took Tesla to join the indexes after it had
Yeah.
made billions of dollars. So you wouldn't catch them by being in the S&P 500. You would catch
Uh-huh.
them after they've been established and after they had billions and billions and billions of dollars of gains.
Yeah.
You're also being weighted down by a bunch of shitty companies that don't make any money,
Mhm.
also in the
Absolutely.
S&P 500.
Well, yeah, so that's why I wasn't arguing for the SP 500. I was arguing for something like a total stock market fund, where I think VT has like 3,700 holdings. So
Okay.
it's SP 500 plus international companies plus like the Russell 2K, where you're looking at small caps. So it's a higher likelihood of you capturing any and all companies that are on the up and coming.
Yeah.
Or
I mean, to be fair, this was specifically the S&P 500 because that's
yeah,
what Warren Buffett had gone after.
yeah,
I would have to look at those because of those 3,600 companies that are in there, I'm sure a lot of them also go bankrupt. So
hmm
I would have to look at the actual performance of those. But the stocks that showed that Magnificent Seven, there is an ETF. It just started. This is the full history. I can't go back anymore. But it's already up
okay,
like 60 or 50%. No, 60% in 9 months. Now,
perfect.
I don't know why you would need an ETF because you have to pay an expense ratio. It's only 7 stocks. I would just buy them separately and just have the weight yourself. I wouldn't pay an
Yeah,
expense ratio.
I mean, obviously, if you look at my portfolio, you see a lot of concentration in these names too, because
Mm.
Apple is my largest holding. I think Meta might be my second largest holding now. I own a significant chunk of Google. Basically, my approach to it has been to evaluate these companies, determine buy prices at which I think I have a reasonable chance of achieving a above market rate of return over the next 10 years, and buying the stocks when they hit those prices. So that's what I've done. That's how I entered Apple. That's how I entered Meta. That's how I entered Google. It's just the other ones just haven't been in a place where I've been able to buy them yet. So yeah, that's probably it makes good sense to me just to do them individually and add them as you can get to the price target where it makes sense for you.
Yeah, the problem is NVIDIA getting to a price target I can stomach. Um, I'm actually very surprised you did not. There is one big argument that you could bring up, and that is Intel. Intel in computers in the future, in future technology 20 years ago was huge.
Uh huh.
Sucks. It
Yeah.
just never makes money. I thought you were going to bring that up.
Well, no, no. I mean, company culture is a big part of that too, and they haven't had a culture of winning in a long time. And I'm not to say
But
that they can't return to that, but it's been a real kind of issue for them for a long time.
any of these could become an Intel, would be the argument against
Oh,
what I said. Yeah.
absolutely,
But
absolutely.
that is all I'm saying. It seems smarter to me to wait for a correction in the market and buy up these than it does the S&P 500 specifically, not
Fair
the
enough.
Qs. S&P 500. All right, guys.
All right.
Don't yell at
Okay.
me too much.
See you later.